Good morning, Vivek, and good morning to all the participants. Welcome you to this edition of VILGST Tax Connect colloquium. We will be extensively covering the 56th GST Council meeting recommendations. There are a lot of things to discuss. There are things which we were expecting, but there are certain things which were total surprise. So to take us through this entire recommendation, and we have Vivek Jalan with us. So, Vivek, over to you to begin with the session.
Thank you, Samir. And good morning and welcome to all the participants for joining early morning. And thank you to VILGST for partnering with us once again for this colloquium. I hope I'm audible and visible.
Yes, sir.
Okay. So, and thank you to Team Tax Connect also for organizing this webinar. The GST Council meeting this time, the 56th GST Council meeting, it was scheduled to spread across 2 days. And that is why we kept this webinar today at 9:30 and not yesterday in the morning. But the GST Council ended 1 day earlier. Actually, they spilled over the secretarial matters on the next day, and they concluded the other matters 1 day earlier. So we thought we would not prepone this webinar and keep it as it is, and we would do a more detailed analysis. So I'll share my screen. Is my screen visible?
Yes, sir.
Yeah. So just a second. Sorry, just a second. Yeah, slides are changing, no, Avik?
Yes, sir. Yes, sir.
Yeah. Okay. So we will break this presentation up into 3 important parts. First important part, of course, is the post-sale discount and other matters which are going to impact all the taxpayers. We have all had issues in post-sale discount, commercial credit note, GST credit note, supplier issues a credit note, and recipient is asked to confirm whether he has reduced the input tax credit. We are all seeing show cause notices across. Circular 212 was there, which required a declaration from the supplier for reversal of the recipient of credit note for reversal of input tax credit. So many other issues were there still continuing in commercial credit notes as well as the GST credit notes. Most of these seem to have been resolved by this GST Council. So we'll discuss all of that. And we will discuss, that will be the first part in GST 2.0. We'll discuss in detail the rate changes, right? And what is the impact on the cost of production? I am sure over yesterday, many of you would have seen the impact on your outward supply. We will discuss on the impact on your cost of production. We'll discuss on the impact of insurance, how you can reduce your cost. You know, since now individual insurances are exempt and group insurances are still taxable at 18%. Rent-a-cab changes are there, transportation GST changes are there, etc. And how you can, from GST changes, how you can also try and optimize your input cost. We will also discuss in the third part on the GST appellate tribunals and other issues therein, right? So we'll start with this GST 2.0 on the other policy aspects other than the rate changes. We'll take the rate changes, impact on cost of production, impact on cost, etc. in the second phase of this presentation. So first of all, transitioning into GST 2.0, there were three major concerns of industry, specifically the supply chain. We know in the supply chain, there are mainly four limbs for the goods before reaching the customers cross four hands: manufacturer to distributor, distributor to wholesaler, wholesaler to retailer, and thereafter to the consumer, right? So it changes four hands before reaching the consumer. The moment Honorable Prime Minister has announced these massive rate changes in GST, and thereafter from the Ministry of Finance, there was this press release on the reducing of 12% to 5%, 28 to 18, with many of the products names also being out through various media channels. The impact on supply chain was that, for example, TVs, for example, monitors, certain monitors, fridges, etc., batteries, all of these products where there was an expectation of rate decrease, the supply chain, distributors, retailers, wholesalers, they stopped purchasing or reduced purchasing to a great extent because of fear of accumulation of input tax credit. Consumers have also, a lot of consumers have deferred their purchases, and therefore a major concern was the date when these rate changes notification would come, right? From the date of the council meeting to the date when rate notifications will come. So they have announced the date very specifically for the rate changes. Circulars, etc. can follow. Rate changes will happen from 22nd of September 2025. So over 18 days, we from industry and trade, we need to not only look at our outward supplies, rate changes, we also need to dig deep into our inward supply, communicate with our suppliers, and ensure that the moment these notifications come out, the suppliers decrease the GST amounts and the GST cost impact is seen in our companies. Mind that in today's competitive environment, the company, the brand which sells at the lowest value, they will have a upper edge in the market, at least from the outward supply point of view, the demand point of view, or at least from the profitability point of view. So we will discuss on all the impact in the next stage. As of now, even if there is a slowdown of the demand from the distributors, from the wholesalers, retailers, etc., if they are slowing down their purchase till 22nd of September, maybe you have to line up all your purchases, you have to line up your supply chain, you have to line up your deliveries, so that on 22nd, from 22nd to 30th of September, in the balance 8 days of the month, you make up for the entire slowdown from 4th of September to 22nd of September. No anti-profiteering clause is there, right? The Revenue Secretary was asked in the press conference Yeah, Mr. Praveen, I will share. I have a specific slide on restaurants, etc., etc. We will share sector wise also. So, anti-profiteering clause is not there. The government will not force, for example, cement companies. Cement rate is reduced from 28 to 18. They will not put in anti-profiteering on cement companies to pass on the benefit of 10% to the consumers. Why? Because in the anti-profiteering era where it was there from July 2017, it was seen that many of the complaints were there, anti-profiteering proceedings were there. But what came out of the anti-profiteering was not much. Why? Because entire rate change impact cannot go down to the consumers, right? So, for example, insurance companies, they cannot pass on the entire 18% benefit to the consumers. Why? Because they will lose out on input tax credit also, and they have to absorb that input tax credit loss. And there, after the incremental benefit which they are getting, they are going to pass on. So that was not seen. Consumers were always complaining that, oh, 18% is not passed on, so much is not passed on, but that cannot happen. Therefore, the government is of the view that they will not put in anti-profiteering, but they will keep on engaging. And the engagements have started from yesterday itself. All the trade associations, we are all having webinars, we are having seminars. Yesterday, we have a whole day seminar with trade and industry on what is the impact and how to pass on the benefits, etc. So government will engage, and overall the market forces will compel the industry where rate change is happening to pass on the benefit to the consumers, right? Demand and supply market forces will compel. Similarly, in the same vein, industry was also talking about inverted duty refunds. Now there is a circular 135 of 2020, which says where the inward and outward supply are the same. At that point of time, the inverted duty refunds cannot be available. So, for example, you are a TV manufacturer, right? And the rate of goods on your product is down from 28 to 18. Now, you have supplied till 21st of September, you have supplied TVs to your distributor at 28. However, from 22nd of September, your distributor will be billing at 18, right? Therefore, this 10% incremental input tax credit will be blocked, right? He can adjust it with the other supplies, but he cannot adjust, get a refund of inverted duty. So the government has very clearly clarified in the FAQ that no inverted duty refund would be available for the blocked-in amount. As per our analysis, across due to the rate changes, around 13 to 18,000 crore rupees may be stuck up in the short run in input tax credit blockage due to these rate changes, but they have to be evened out going forward. Similarly, compensation cess is a very, very big question which is asked. Yesterday, from North Block also, they had a very big press conference, and it was discussed. What about the input tax credit of compensation cess? So we got a call from various coal dealers that we have input tax credit of compensation cess from coal. We had queries from the non-alcoholic beverages sector, where compensation cess is there. Automobiles, compensation cess input tax credit is there. What happens when from 28th to 22nd of September, compensation cess is withdrawn? What happens to the accumulated compensation cess? That has been clarified. That becomes a cost. You have no option until unless you are into pan masala, gutka, etc., where compensation cess will continue for a certain more point of time. If you are non-alcoholic beverages, coal, etc., where compensation cess would be withdrawn from 22nd of September, then the accumulated input tax credit of compensation cess would be a cost. It would have to be absorbed as cost. There is no option of a refund or adjusting that compensation cess going forward. That has been clarified very, very clearly, right? So from 4th of September to 22nd of September, if you can sell as much as possible and utilize that input tax credit of compensation cess, that would be beneficial to your companies. Yeah. A very, very big relief to global capability centers, GCCs, online bidding platforms, intermediaries in India who had foreign customers. Section 13(8)(b) in Dharmendra Jani, Bombay High Court, the two-member bench, both the members were for and against whether GST would be required to be charged on intermediary services or not. Right? One of the members, judges, he was of the view that on intermediaries, no GST should be charged. And other member was of the view that no GST is applicable because why? Because of 13(8)(b). So just to understand in perspective, what is 13(8)(b? Now, in case I will explain with an example, you are a GCC in India, right? Your customer is in London, okay? So you are supplying services from here. Your customer is out of India in London. You are getting the foreign exchange for India. You are doing the billing in foreign exchange or through Vostro Nostro mechanism. And your customer is not your branch. It is a separate company, although it may be a related party, but it is not your branch. However, the last condition of export of services, place of supply should be outside India. That is not met in case of intermediaries, right? So you are considered to be as an intermediary, if at all. Place of supply, because you are an intermediary, as per section 13(8)(b) of the IGST Act, place of supply is considered to be place of supplier. That is your place of business. So you have to charge CGST and SGST at the rate of 9% each. And your customer in London does not get the input tax credit. Over the last, 1 year or so, we have been regularly, making policy advocacies with the GST Council. In the 55th GST Council, it was there and it was about to be passed. But Kerala and Karnataka, we were informed, they objected, they wanted a further deep dive into this because exposure was high. A group of ministers, a committee was formed for this, and finally they cleared it. Therefore, this time they have come out that section 13(8)(b) of the IGST Act would be deleted. And therefore, place of supply would be place of your customer under section 13(2) of the IGST Act. And therefore, for all of these intermediaries, right, the entire value would be liable to be treated as export of services. And rather than paying 18%, you would be getting refund of all the input tax credit eligible to you, right? So this is a big, big relief as far as intermediaries are concerned. Post-sale discount. Now, many issues all of us have faced in this colloquium over the last 3 years. We have kept on discussing, I think in more than 5 or 6 colloquiums, in many of our presentations, we have kept on discussing on post-sale discount through GST credit note or through commercial or financial credit notes. I got many calls and texts yesterday on post-sale discount. Further, clarification to what comes. And so, we will discuss in detail. We will spend 10 minutes only on this topic before we go on to the other topics. So there were 3 conditions where through post-sale discount, you can issue GST credit notes and can reverse your output tax liability. Number 1, you should have a pre-sale agreement. Number 2, your credit note, GST credit note for post-sale discount should be linked to the original invoice. Number 3, you have to ensure as a supplier and issuer of credit note that your customer reverses the input tax credit, right? So 3 conditions for GST credit note to be issued on post-sale discount, right? All these 3 conditions under section 15 subsection 3 clause B 1 and 2, all 3 conditions would now be negated. 15(3)(b)(1) would be deleted. It requires pre-sale agreement and linkages of credit note with the original invoice. You might ask me a question. In 2019 also, the linkage of credit note with the original invoice was deleted, but that was deleted only for the purpose of reporting on the GST network. However, the law remained to link the credit notes with the original invoices. Now they have removed the law also. Very recently, you see, we had we are continuing to have deal with the proceeding in Karnataka, right, in Bangalore, where our client is a GCC, and what happens in a GCC is you agree, whenever you are a GCC, you would be rendering services at cost plus profit to a foreign party, right? To your own company many of the times, right? Now, what do you do in such cases? You say, okay, my employee cost is 100. In Chennai also, we are dealing with the same issue. So you say your employee cost is 100 and you will be charging a 20% profit. So while your cost would be 100, you would be charging 120 for your services. But employees now, many of the time, the employee turnover in GCCs is high. So the employee cost and other similar costs, they are a little flexible. They keep on changing. Say one employee whose salary was 5 lakh, he resigns, and for that you have to take an employee with 5.5 lakhs. What do you do with that extra 50,000 cost? Naturally, you will bill it across. However, sometimes what happens, an employee is paid 6 lakh rupees, he resigns, and you get in another person who's doing the same job at 5.5 lakh. In such cases, that 50,000 benefit also you need to pass on to your customer. So what they do, they agree on a rate which they would be billing month on month, and thereafter at the end of 3 months, 6 months, etc., they revisit the rates with their clients, and finally they come to a particular final rate which is agreed. If the rate charged is less than what is agreed, then they issue a debit note. Otherwise, if it is reverse, they issue a credit note, right? So now this went into tremendous issues. It was asked by the department that, look, you have no pre-sale agreement for the rate. The rate agreement should be very, very specific. And number 2, your credit note linking is required. Of course, credit note linking we could give very easily. It was tagged in SAP. But this pre-sale agreement, it is such a dynamic environment, and the customers also do not increase. Specifically, if your customer is sitting in Europe, they will just not agree. They have a particular format and they will take the bills in that format, right? So the pre-sale agreement bit, it came into a litigation, and this credit notes which we were passing, the company was passing for the post-sale discount, that went into litigation. I will tell you one more aspect to it in the next slide, right? So now all of these issues, this pre-sale agreement, again, if you had schemes, if you are into, say, mobile trade, again, since we started with the example of mobiles, let us continue with the example of mobiles. So if you are into a mobile manufacturer, you launch a mobile. Now you agree with your customer, a pre-sale agreement that, okay, now whatever, every month we will review the prices in the market, whatever is the the rate of mobile from the date it is launched, within 1-2 months, the prices travel southwards. So you get into an agreement that, okay, every month we will review whatever is the market price, I will give you a post-sale discount. There is a pre-sale agreement, but even that gets into litigation. That the officer argues that this agreement is not certain. The discount which was given, that is not certain. There is no slab also. And therefore, this pre-sale condition itself is completely void. All of these issues of pre-sale agreement would be set to rest. 15(3)(b)(1), that would be deleted. However, again, this intermediary and this again pre-sale, whatever, wherever amendment in the law is required, it is our understanding that this requires to be passed from the parliament and 50% of the state legislatures. It may see light of day only in the Union Budget 2026. Thereafter, it would take another 6 months. So possibly we are sitting in September 2025. This agreement 15(3)(b)(1), 13(8)(b) intermediaries, both of these policy amendments could see light of day only in September 2026, right? So we still have 1 year to go from the day it may be implemented. If it is passed in the winter session, then maybe 2-3 months earlier, maybe somewhere in June, July, it may be implemented, right? However, this will come as a relief going forward whenever it does come into effect. The third condition, 15(3)(b)(2), that you as a supplier, issuer of credit note, have to ensure that the recipient reverses the input tax liability. That also goes, right? So what we understand now, the government is very clear. Whoever issues the credit note, if the credit note is fine, if it is within the 4 walls of my definition under 15(3)(b), then I'll allow the GST credit note. I catch the recipient of the credit note, right? The recipient of the credit note will have in the IMS, will have the credit note in the GSTR 3B. I catch the recipient of the credit note, whether the recipient has reversed the input tax credit or not. That becomes a next stage problem. Now consider you are a recipient of credit note. There are many frauds going on in the market also. A supplier supplies you a malified supply. He supplies you goods at 1 crore plus 18 lakh GST, and thereafter issues you a credit note. After you pay him 1 crore 18, he issues you a credit note of the entire amount and elopes. It will become again this missing supplier issue even for the credit notes. The government may come to you and may ask you as a recipient why you have not reversed the input tax credit. So IMS becomes very, very important. Please be very, very vigilant in your IMS, invoice management system, and keep on a very close look at your credit notes. You must have a mechanism where any credit note where it auto-populates, there must be a auto tool where you get a alert and you inquire and you take the action on the credited note at that point of time. Why that action is required, I will come in the next slide, right? Also, again, the impact, right? Circular 212, that is now withdrawn, right? Circular 212 is withdrawn. The industry was aggrieved that, see, Circular 212 requires me as a recipient of the supplier and issuer of the credit note to take a declaration from the customer that he or she has reversed the input tax credit. They have withdrawn this circular. Now, they leave it open. They say, okay, I will go to the recipient and I will require, okay, whether you reverse the input tax credit, right? I will not even look at the supplier. Let the recipient prove everything, right? So, you now as a recipient not only have to reconcile your ITC, you have to mandatorily, I would say, more diligently reconcile the credit notes in your GSTR 2B, right? Be very, very careful with credit notes going forward, friend. If you are a recipient of the credit note, all of these may sound good as a supplier, but when you are a recipient of these credit notes, life becomes a little more difficult as and when these changes see light of day. Similarly, they have made changes in section 34. They would be making changes in section 34 of the CGST Act on credit notes. Now, what about financial credit notes? Now, here there is a big breakthrough, I would say, as is expected from the minutes and the press release of the GST Council meeting. Financial credit notes. One issue was, if you as a supplier are issuing financial credit notes, certain field officers were asking the recipient to reverse the input tax credit just like a GST credit note. Now that we understand would be put to rest. There was a circular 105 which said accordingly, and now that would be reinstated. We understand that for financial credit note, no input tax credit reversal should be required. However, let's wait for the circular. Number 2, and the biggest issue, right? I think thousands of show cause notices have been sent to dealers. Again, I will go to my same example, mobile. Manufacturer, distributor, wholesaler, retailer, right? 4, limb supply chain. Now, the manufacturer of the mobile phone, the intention of the manufacturer is to, after 1 month, is to give the discount to the retailer, because it is the retailer who will finally send the, sell the goods to the consumer, right? However, he has to go through the channel. He has to go through the supply chain. Manufacturer will give discount to wholesaler, wholesaler to distributor, distributor to wholesaler, wholesaler to retailer, and thereafter it will flow to the consumer. This post-sale discount through commercial credit notes, pass-back discounts, what we generally call it in the trade parlance. This was litigated specifically many points by DGGI, where it was held that no, the recipient is doing certain service. The recipient of the credit note is doing certain service for the manufacturer or the supplier, and therefore the recipient should issue a service invoice. It was decided and held in the decision of the Honorable Madras High Court in the case of Supreme Paradise. Many other decisions are there, that it is a discount simpliciter. So no requirement of service invoice. However, still certain disputes came up. There was another scenario. There is another scenario. Now, yesterday itself, in after this minutes, I got a message that what about these promotional activities? Now, manufacturer tells the distributor that you or the retailer that by you put up a showcase with my products, display my products. For that, I will give you a commercial credit note. Two different activities. One, the discount is non-conditional. No activity requires to be performed by the recipient of credit note. Second, the commercial credit note is conditional. Activity needs to be performed by the recipient of the credit note. We understand in case an activity is required to be performed, then that should be a service invoice. Possibly, let us see how the final circular shapes up. And where no activity is required, then it is a discount simpliciter. Therefore, agreement is very important. Even though 15(3)(b)(1) that is deleted, other ye are deleted. However, agreements in taxation is very important. It may be indirect tax or income tax or transfer pricing. Agreement is very important. Your agreement should be very clear what is that you are requiring from your customer, right? Now, we got again a show cause in a very, very large company. They were giving a reimbursement, a credit note for reimbursement of expenses which their distributors have done. Friends, how can it be a credit note? It is an activity which the guy is performing. The distributor is performing an activity. For that, he is taking reimbursement. How can that be through a commercial credit note? Needs to be an service invoice. That is our view. Therefore, you have to go into the transaction. Maybe these conditions are relaxed, but going forward also, let us see how the circular comes. Still, for credit notes, you have to understand the transaction and take a call. The thumb rule, conditional, not conditional. Now, I said few minutes back, I will come to two critical issues. That is interest. Interest on credit note and debit note. This is now across the country. We got a show cause in one of the clients in Delhi, and now the same show cause is being replicated so many states. Debit notes, whenever you are raising a GST debit note, you have to ensure that the activity for which you are raising the debit note is performed in that month. Otherwise, there may be an interest. So, I will give you an example. Now, in the case of GCC also, right? Take the same example. GCC is agreeing to that debit note in the month of June. They are agreeing, okay, the final price, we have been billing at so much, the final price is so much, and therefore in the month of June 2025, they agree that, okay, this much of amount additional you please bill. However, the GCC does the billing in September. So for that debit note, interest might be applicable because time of supply occurred when the agreement was done. Right? So price escalation. Yeah, Mr. Rajendra, I will answer your question. Price escalation. Now, if there is a price escalation in the month of June 25, you make the billing in the debit note in the month of September 25, interest may be triggered. Similarly, on credit notes. Now, again, after this 15(3)(b)(1)(2) are gone, interest again becomes an issue. And in IMS also, they have become upgrading, and there will be a facility also to keep the credit note pending for 1 month. If that be the case, If you keep a credit note pending for 1 month and after 1 month, you reverse the ITC, interest applicability might be there. So friends, why on the supply outward side, credit note for the supplier, the issues are going. Recipient, you have to be very, very diligent with your credit notes, and for the supplier, debit notes. So this was an overall, understanding on these credit and debit notes amendments which are coming. Inverted duty structure correction will be there. Textiles, fiber neutral policy, all types of yarn will be 5%. So raw material for textiles, 5%. Textiles, garments below 2,500, 5%. Above 2,500, of course, 18%. So textiles inverted duty structure correction is happening. Textile, leather. These are the two sectors which have been really badly hit because of this United States of America imposing 50% tariff on India exports. And therefore, they are rightly supported by the GST Council to boost their domestic demand. Fertilizers, sulfuric acid, ammonia, etc. now 5%. Also, these many nitric acid, sulfuric acids, etc. All the acids, many of them are used in aluminum industry, etc. So I will come to cost of production when I'm discussing the rates. Your cost of production would go down. Inverted duty structure refund, export refund, SEZ refund. 90% of the refunds would now under rule 92(1), 91(2) would be available within 7 days. If the officer is not giving you automatic provisional refunds within 7 days from 1st November 2025, then he has to give an explanation why 90% refund is not sanctioning within 7 days. Scrutiny can happen afterwards within 60 days for final refund. But within 7 days, he has to give provisional refunds, right? So this is a major relief for even inverted duty refunds. Export, of course, refunds, SEZ refunds, all types of refund. 90% refund within 7 days. Specifically for e-commerce operator, the suppliers who are supplying through e-commerce operator, Flipkart, Amazon, etc. They are small traders wanting to supply across India. For them, it is a big problem to take GST registration. So now 3-day registration will be given. However, there is a condition: you cannot bill with a GST value of more than 2.5 lakh rupees in 1 month. If you take 3-day registration, but you can change to the normal registration. So registration, we discussed this, I remember, in our colloquium after the 55th GST Council meeting in December 2024. You can go to our video. We discussed this 3-day registration in detail. There was a discussion, and now over the last 6 months, it has been firmed up. Now, the second part of my presentation, the rate changes and the impact on rate changes. We have culled out around 20 items which would impact tremendously cost of production, cost of business. Number one, in case you or your clients are doing government contracts. Now, government contracts, whenever there is a GST rate change, there is a hue and cry, right? The government agencies, the government departments, they do not invoke the escalation clause very easily. Government contracts, works contract have been increased from 12% to 18%. So works contractors who are doing government contracts, immediately you must start liaising with your customers, right? Very, very important. Number two, insurance. Now there is a lot of talk about insurance. Honorable Finance Minister in the press conference was very clear. 18% to nil insurance in case of mediclaim and life insurance is only for individual insurance policies, not for group policies. So if your company takes for all your employees a mediclaim or life insurance group policy, the insurer would keep charging 18%. So maybe you can go to your insurer, because this is a huge cost, and input tax credit for mediclaim and this life insurance for employees that is blocked. So you can go to your insurer and ask that in case all individuals take their own policies, and then maybe the cost of those policies you can include in the salary cost of the individuals in case there is a benefit to your company. That would depend upon what is the differential premium between individual and group policies, right? If, say, for example, you are paying for your company a 5 crore rupees insurance premium and 18% GST. So 90 lakh rupees ITC is blocked. However, if you see for all your employees, if they take individual policies, your total premium is coming to 5 crore 25 lakh rupees. So still, if this 5 crore 25 lakh, you factor it in the salaries, you have to work with your HR department. If you factor this in the salaries and still you help save 65 lakh rupees, that is our thought. You know, you have to see the feasibility based upon the impact also. Rent-a-cap. For all your rent-a-cap services, 12% to 18% with ITC. So it is all blocked, you know, rent-a-cap services for more than less than 13 seaters, the ITC is blocked. So this would be a cost. So you can ask your rent-a-cab operator to go into the second regime of 5%, right? Because ITC is blocked. But yes, in case you are again, say for example, you are a software company, you are a GCC with 1,000 employees, where you give the bus facility, and you can take the credit of the 13-seater plus buses input tax credit. So there you can ask your transporter to give a 18% with ITC invoice, right? Because that ITC is available. Now again, friends, you know, we have done it in many companies where this kind of double regime exists. Maybe you can ask your operators, rent-a-cab operators, maybe have 2 GSTINs. One from where they supply 5% services where no ITC is available to them, and the other through 18% plus GST. So that they don't get into this rule 42, 43 reversal, you know, problems. And also they optimize the GST, right? Solar power generating system. I will come to SPGS. Yeah. Railways again, same regime like GTAs, 5% with limited ITC, 18%, 5%. Now, this is very important. Railways, 5% without ITC, 18% with ITC. So railways, maybe they need to restructure, take 2 GSTINs or do something. But we as an industry, in case we are using railway services for transportation of our goods, we need to see what is suitable to us. 18% with ITC, if ITC is available to us, that would be more suitable in my view. And therefore, you might ask railways to do that billing if that suits, if the cost comes down. Logistics companies. Say you are a logistic company, right? You are lifting the material from India, delivering it to Japan. Or you are lifting the material from, say, Maharashtra, delivering it to Gurgaon, right? Various legs are there. GTA is there, loading, unloading is there. Or for example, you lift from here and supply it to Thailand through waterways. In such cases, 5% is now applicable without ITC and 18% with ITC, just like GTA. So again, all these logistics companies, you need to again rework on your GST outward supply rate, whether you will go for 5% or 18%. And again, as I said, I'm just sharing a thought. We have done it in many companies, because now there would be, for example, some customers who would be wanting 5% without ITC to reduce their cost. Some customers who would be telling you 18% with ITC. So whether or not it is a good option to take two GSTINs to reduce your disputes. Let us be very clear, keep two trial balances, share the appropriate costs accordingly, and have a very, very clear mechanism for distributing the ITC, charging GST, not charging GST, right? Delivery services, Swiggy delivery services through e-commerce operators, no more 5%, 18%. Hotel accommodation, right? 12% to 5%. However, there is an issue with hotel accommodation rent. In case your rent is less than 7,500, even if you sell one room in the last year below 7,500, then you cannot take the 5% rate, it will be 18%. So that issue still remains. If you sell all your rooms in the last year at less than 7,500, then you can go from 12 to 5. Food products across, you will see huge rate changes are there. So FMCG companies, cost needs to be reduced on all the food products. Restaurants, somebody was asking restaurants. All your input raw material, by and large, the cost will be slashed. So restaurants, it would be very, very important that restaurants rework on your costs so that you can accordingly pass on the benefit to the customers, right? Now for the corporates, factories, if you're not taking input tax credit on the canteens in the factories, right? Wherever it is not statutorily required, etc., etc. If you are not taking input tax credit for the food supplied in your canteens, other than factories also, in your HO, I think most of us now, in our offices, we have canteens where we outsource it to a vendor. Please rework your costing with your vendor, because the vendor's cost would go down tremendously, right? All food items rate have been reduced. So maybe right time to rework the cost with the vendors. Now restaurants, again, one very critical thing which was there in the press release separately. Now many of the restaurants which are standalone restaurant, right? What happens, say for example, in the highway, you have a very big space, you have a restaurant. I built 2 rooms and I say, Baba, my restaurant is a specified premise. I will charge higher rate of GST 18% because mine is a specified premise. You have, if you are a standalone restaurant, you cannot charge the higher rate. You have to charge a standalone restaurant rate. Now, all the restaurants need to be very, very careful of this, to prevent any action from the department. This was there in the press release separately. All the brands, pizza, etc., chapatis with potato, without potato, full chapati, less full chapatis, and Honorable Finance Minister also said it in the press conference, no more dispute. We have seen many disputes. All chapatis, 0%, nil. Lassi, Kesar lassi, whether it is a non-alcoholic beverage or milk product, put to rest. All beverages like lassi with milk, 5%, right? Aerated waters, non-alcoholic beverages, again, their cess will go. Now it is 28% with 12% cess. Cess will go, 40% rate will be applicable, just like coal. I'm coming to coal. Yeah, coal. Production, cost of production. Coal is a major saving. For all of you who are in the production space, for all of you who have clients and who are producing and use coal, coal would be a very, very important cost saving for all. How? Today, the GST rate on coal is 5% with 400 rupees per metric ton cess. So around the cost of coal today is around 5,000 to 7,000 rupees. So 400 rupees per metric tons means around 6 to 7% is the compensation cess on coal. So 5% plus 7%, it comes to 12% GST rate. That 12% becomes 18%. But mind that you, as if you are a producer, you are not getting input tax credit on coal compensation cess because you have no outward compensation cess, right? Now, 18% is the GST rate. GST rate goes up from 12, 13, whatever, as per the cost of coal. So from 12 to 16% is the effective rate of coal, depending upon the cost of the coal, which we understand. It goes up to 18%. But you can take the entire input tax credit. That is a big saving, right? So again, cost of production needs to be re-looked at. This will be. Now, however, if you are a dealer of coal, yesterday I got a call from a dealer of coal. What do I do with compensation cess? Friends, it is very clear. Ministry is very clear. Compensation cess accumulated on 22nd September becomes a cost. Now, one dealer said, I have imported tons of coal. My deal with the exporter is frozen. Now you have reduced the GST rate. My consignment will come after 22nd September. What do I do? I think it is great news for you. Why do you need to do something? Right? You can pass on this entire input tax credit. Right? So, friends, we need to understand our impact, specifically the MSMEs. The increase in the rate may not actually be a disadvantage. It may be an advantage. So as I said, all types of acids, sulfuric, nitric, ammonia, etc., 18 to 5%, big savings. Aluminium, etc., all these industries, many of them use these kind of acids. Now packaging, all the manufacturers use packaging. Entire supply chain packaging is a huge cost, 12% to 5%. Please renegotiate, right? If your cost is all inclusive. Cartons, boxes of corrugated paper, non-corrugated papers, 12 to 5% flat. So 7% saving is there in case you have an all-inclusive rate. If you have a cost plus GST, then it is neutral. Now health, medicines. Again, so, I think some medicine manufacturers are also here in this webinar today. Most of your medicines are 5% now, but some medicines become exempt. So again, that Rule 42 reversal issue remains. Whether you want to take two GSTINs for exempt as well as taxable, so that you need to reanalyze. Now that would be a big exercise. So that decision needs to be taken. But what I understand, things would become more simpler. FMCG major changes, 12 or 18% to 5%. So FMCG, entire supply chain, all the manufacturers, they need to relook at the costs. Many of the FMCG and most of the FMCG product are, 10 rupees per sachet, 50 rupees per sachet, inclusive of GST. So either you increase your grammage or you reduce your cost. Oil industry. you may see an increase in your costing because you don't get input tax credit. Support services for exploration, mining, drilling, petroleum, crude, natural gas, etc. up from 12 to 18. And this GST is a cost. So oil industry, we understand, maybe costs may go up slightly. Real estate, the big blockbuster, we all know cement, 18% from 28%. Portland cement, aluminum cement, slag cement, super sulfate cement, whether or not colored or in the form of clinkers, everything 28 to 18. Big boom for real estate, I would say. Big savings, considering most of the outward supply is blocked or not liable to ITC. Granite, marble, blocks, not cut granite or marble, 12 to 5%. Fly ash bricks, 12 to 5%, right? Now, very important, cement bonded particle board, what you apply in your roofing, right? False ceiling, jute particle board, rice husk board, right? All kinds of boards. Even for furniture now, instead of plywood, boards are used. So all of this becomes cheaper. I think it's from 12 to 5. So all of this becomes cheaper. Automobiles, by and large, now we all know. But one very important for lithium ion batteries, for electric vehicles, parts of lithium ion batteries, parts of automobiles were 28, right? Now all become 18. So no more inverted duty structure. Three-wheelers, autos, rate reduce. All batteries, 28 to 18. Lead acid batteries, 28 to 18. Textiles, we have discussed. Interior decor, curtains, towels, etc. 12 to 5. Textiles of industrial use. Now, this is very important. Many of the textiles, they are used for industrial use, 5911. That goes down from 12 to 5. Paper industries, I would feel that there are multiple slabs for outward as well as inward raw material. So paper industry, you need to be careful. Even we are still working out the impact of the rates on paper industry because there is a two-way inward and outward impact. Now, solar, somebody was asking on solar power generating system. All down from 12% to 5%. It reduced for everything, 12 to 5. However, this is a little of a problem. Now, we are representing before the council. Now, if you are a supplier of solar power generator or generating system, it consists of three things. Battery at 18% now, module at 5% now, inverter 18%. So if you bundle it together and supply it at 5%, there's an arbitrage of 13%. Now what happens if you supply an inverter only for solar power generator? Can you supply at 5% saying it is a solar power generator? In our view, maybe no. So this dispute may continue until unless there is a clarification, and that arbitrage, that is huge from 18 to 5. So that dispute may continue still. But installation of solar power plants, installation of solar modules, that rate reduces. For installation of solar power plant, there is a hybrid rate, 70% of goods and 30% of services. So 70% into 5% now and 30% into, I am assuming it is 18% if the job work rate, because it will fall in the residuary job work rate. So 8.4% with the hybrid will be the hybrid rate. Electrical television sets. 1 week back, we were deliberating on television sets. There is a big dispute today. More than 32 inches television, high rate, less than 32 inches, less rate. Monitor is a television or not a television. all disputes put to rest. All television, more, less, 32 inches, everything, monitors, LED, LCD, projectors, everything down from 28 to 18%. So that dispute goes. So these are by and large the major impacted sectors and your input costs. So yesterday, I think most of us have seen our output rate changes. I think over the next 1 or 2 days, we should go to our purchase registers and see what is the rate change on our inward supplies also. And if there is an option of saving, like I said, insurance, rent a cab, right, etc. Yeah. So these are all about the rate changes impact. We would take all the questions. I see there are some specific questions on rate changes. GST Appellate Tribunal is there. That is a very big announcement. By September end, start filing your appeals. Portal will be ready. By 31st December, all the members would go. We will complete the training. December, the hearing in GST would start. You get the time to file your appeals in old cases till 30th June. So the time limit of filing the cases in GST is 3 months. You get first up time till 30th of June 2026. But please do not delay your filing of appeals because many appeals will start filing. The more you delay, the more your hearing would be delayed. Friends, filing of appeal in GST is not like commissioner appeals, right? We have discussed this in the past, and I would resound you off now that you will start filing the appeals in GST. Many of the cases now in commissioner appeals, yesterday in our seminar, we were discussing this threadbare. Many of the times we feel that, section 73, 74 arguing before commissioner appeals is, many a times a wasteful exercise. GST is not the same. Commissioner appeals is, or the first stage of appellate authorities, they are in Ministry of Finance. GST Appellate Tribunal will be reporting to the Ministry of Law and Justice. We have seen in the past Sept, ITAT. There is, a lot of, natural justice. There is hearing on merits. Even time barring period is a big point in GST. So please argue on 73, 74 in genuine cases where 74 is applied, where 73 should be applied. All of these cases can be argued. Many of the times you have not been given a hearing. Natural justice under section 75. I have reiterated many times. Friends, please look at section 75. Whenever you are filing appeals, section 75 is a code in itself for natural justice. Show cause, a point is not taken, order a point is taken for the first time. Section 75, quashed. Order cannot travel beyond show cause. 3 adjournments not given. Adjournment given for 1 day. You are getting show cause after the show cause hearing date has gone. All of these are grounds for GST because GST can also remand back. Very, very important. We are talking about circular 212 being withdrawn. What about these 2A3B circulars? Circular 183, 193. You as a recipient have to take declaration from your suppliers. All of these circular are not binding on the GST Appellate Tribunal. It may be binding on the officer, not on the GST. So the wires of the circular can also be challenged in the GST, right? So be careful whenever you are, and be more vigilant and more particular whenever you are filing your appeals before the GST now that the appeal filing will start. So I think that is it for the discussion side. From my side, I would take the questions now. Okay, these slides will be shared by you. I have not, you may have seen that there were around 70-80 slides with, that we have made our comments item wise, that will be shared with you, with our comments. We have discussed the main points. Yeah. So, okay, Mr. Chauhan says Happy Teachers Day. Yeah, thank you, Mr. Chauhan. And to all of you, you all are teaching somewhere, Happy Teachers Day. Mr. Agarwal says, would request to share your opinion on restaurant industry ice cream parlors. I have shared my opinion, Mr. Agarwal. Number one, restaurant industry ice cream parlors. The ice cream rate are also reduced. I have not taken specifically through ice cream rate. It is there in my PPT highlighted. Restaurants, standalone restaurant, you cannot charge 18%. That by building 2 rooms in the standalone restaurant, 18% higher rate cannot be charged. Restaurants need to rework at their costing, because the costing would go through a revamp. I would say the cost would go down because you don't get input tax credit if you are charging 5%. Yeah, if you are in the hotel, if you are a specified premises, and if you are taking ITC, then it's a separate matter. But I think, yeah, restaurants, you need to rework on the costing. Mr. Bharat says, what about ITC if the item is 0% FM, 5% or 12%? Whether accumulated ITC is to be reversed from, okay, 0, yeah, of course. So if you are currently at 5% or 12% with ITC, and you have got a accumulated ITC on 22nd September. So they have clarified in the FAQ, also is there in the rules, that you have to reverse the accumulated ITC. But again, situation changes in case you have some products exempt, some products liable to GST. There you have to do a proportionate reversal. Mr. Nayak says, can we make sale of air conditioners to dealer on approval basis now and dispatch the material on delivery challan and do the billing after 22nd September? Mr. Nayak, very, very risky. Section 31 makes it very clear you need to charge GST on your invoice before or at the time of removal. Now, if you are selling everything on approval basis, again, that might get into litigation, because 100% of the items, if you sell on approval basis and 100% is accepted, becomes a problem, right? So be careful, only in genuine cases it should be done. Otherwise, one must desist. It's a short term 13, 14 days pain, but these all issues might come up in assessments going forward, and it will be a pain to defend this. Mr. Rajesh says chartered accountant charge 18%. This can also be reduced through 5% or no change. I feel no change, Mr. Rajesh. It's 18%. Chartered accountants credit is available, so not much issue. Mr. Ajay says how to provide an impact on MRP based product where there is an increase of tax, like garments. So garments are not on MRP, Mr. Ajay. Garment is on transaction value. Say, for example, if you have a garment of 2600, but your sale value is actually 2400, 200 rupees discount. So you would charge GST on 5%, not on 18%. Can we sell at a higher price than MRP? So GST has no issue. Again, now first part I have answered. If you sell at higher MRP, GST has no issue, but legal metrology will come in the way. So you need to be careful. Mr. Naidu says 116.3 1A is removed. Would there be commercial credit notes? Very good question, Mr. Naidu. Whether there would be commercial credit notes because pre-sale agreement would go, etc. So that needs to be seen. Even while I have not said it in the webinar, I also have a feeling that if that 15.3B1 goes, no pre-sale agreement is required, then where is the need of commercial credit notes? But commercial credit notes might still be there due to other, compelling reasons. In case of interest on, Mr. Rajender says, in case of interest on price escalation, need more clarification. Views are deferred. Views are deferred. Okay, so maybe, you need more circular on this. Mr. Vijaykant Mani says how IMS is not mandatory. Now IMS is not mandatory. When we can expect IMS to be mandatory for credit note option will be enabled. Pending option will be enabled. They are working on it from the GST network. We have an information that very soon, possibly once this section 34 amendment, I'm not talking about the current amendment, the amendment which was made in Finance Act 2025 in March, that amendment, whenever it takes effect, they will also introduce IMS with a pending option. Swagata Das says any provision for interest waive off on financial year 21-22 April to May. Date was extended for 1 and 3B, but 9% interest rates for department scrutiny. Yeah, so that extension, what I remember was for returns, but not for the payment. However, I have to also look at it. If it was not for the payment, of course, it is contestable. But Swagata, if you can, write to me with your exact issue, whether this extension was for payment also, then we can take it up in case you have a problem in any of the commissionerates. Mr. Bharat says, please explain applicability of GST in SPGS. So, Mr. Bharat, I think I have discussed solar power generating system in detail. Mr. Prithanu says for railways, if the contract is works contract, then I hope ITC with 18% GST will be there. For works contract, it should attract 5% GST. Yeah, if it is works contract, no, this is only for transportation, not for works contract. But for government contracts, if you are doing works contract, then it is 12 to 18. Mr. Dinesh Singhania says whether we'll get GST on input payment to movers and packers for employee relocation expenses. Very important question, Mr. Dinesh. In my view, yes, input tax credit should be available. It is not a personal consumption. It is a business expenditure for the benefit of the company. It is not employees' own, decision. It is the company's decision to shift the employee because of the resultant policy of the company. It is a business decision. ITC should be available for furtherance of business. But yeah, department contests on this personal consumption front, but I feel that is contestable. In the same vein, guest houses, department contests on personal consumption. In my view, guest houses are completely for business and ITC should be available, just like a ITC for employees stay in hotel for business purpose. Mr. Randeep Kaur says FMCG hotel points. Network issue. You can go through this PPT, this webinar on our YouTube channel in Tax Connect. Also from VILGST, Samir would circulate the video. You can go through the recording. Mr. Aditya Jain says in case of inverted equity structure, if we have accumulated ITC prior to effective date, then how the refund will be given post effective date? No refund is available, Mr. Aditya Jain. No refund is available on inverted duty structure for traders. But for manufacturers, no problem. Manufacturers, just like in the past, inverted duty refund will be available. In case of credit note for the supplies affected prior to the rate change, what will be the rate of tax for such credit note issues post effective date? This is a very good question. In my view, it would be the original rate, the rate of the invoices. That would be the rate for the credit notes. Mr. Singhania, any change in GST on operating lease of RFID without operators? Yeah, for leasing of equipments, right? Same policy is there. For leasing of equipments, etc., whatever is the rate of the equipment, that will be the rate of the leasing. So in case this RFID assets, their rate was 28. Now it is increased to 40. Leasing also goes up to 40. Mr. Muthukumar says, please provide insight about paperboard industry applicable rate because there is a lot of confusion. Yes, as I said, Mr. Muthukumar, that paperboard, there are multiple slabs, coated, uncoated for exercise books, uncoated for others, and also the raw material space. So we have in our PPT, we will circulate this. For paperboard, there is a specific 2-3 sliders. You can go through that. We have given our comments also, but it is a very, very elaborate. So many sectors cannot be discussed in the webinar. Okay, Mr. Praveen says ice creams are 5 from 18 now, which will be in line with restaurant. Hope ITC will be available to ice cream business post 31st December and ITC accumulated till 21st would be available to adjust. Yes, if you are selling ice creams, then ITC as in the past will be available. No change in policy on that. Now, if there is an ice cream parlor and if you are selling ice cream and you are charging the ice cream rate, then also it will continue to be, ITC will continue to be available as in the past. Okay, any changes in security agencies GST rate? Mr. Roshan says, as far as I feel that there is no changes in the rate of manpower and security agencies. Okay, Miss Smruti says, what will be the impact of job work services? So job work, we have a slide as I discussed. There are certain job work like leather industry, etc. That job work, so the rates are reduced. But like for liquor industry, all other job work goes to 18. For liquor industry, certain job work was at 12. That also goes up to 18. So you can go through our PPT. We have specified, it is there in the FAQ. You can go through the FAQ released by the Ministry of Finance. Mr. Vijaykant Mani says, since refund not possible on accumulation of ITC, amount will become cost. Yeah, and product cost. See, yes, Mr. Vijaykant. See, there are two issues. Number one, accumulated ITC may not be a cost. If I am the statutory auditor, I would not, take a stand that you please write off, because maybe in future you will, start another product where it may be utilized. So ITC is indefeasible right? But yes, if compensation cess is there, then it becomes a cost. Mr. Krishna says, what will be the GST rate for sale in transit in accordance with section 14? So they have clarified it in the press release. For sale in transit, you make the invoice already on 21st of September, right? The rate would be that of the invoice, 21st September rate. Mr. Muthukumar, please, more insight about paper. We have discussed GTA sector after rate revision. So GTA, it goes up from 12% with ITC to 18% with ITC, right? 5% remains the same. So transporters, by and large, those who are requiring a billing from you on 12% with ITC, they are getting the input tax credit. So they will keep on getting the input tax credit for 18%. Now, very important is traders whose margins are very low. For them, transportation, this increase might result in accumulation of ITC. So where traders are concerned, whose margin is 0.5%, 1%, there this transportation cost increase of 6% may lead to accumulation of ITC. There the transporters may they need to talk to your clients if they want to shift from 12% with ITC to 5% RCM. Being a Mr. Randeep says, being a manufacturer, will we be able to take compensation cess on coal in the form of GST? Credit of compensation cess. No. Compensation cess is gone. Accumulated GST on compensation cess on coal, that is gone. Mr. Satya says, can you explain about GST services for pharma? So as we discussed this, GST services, GTA is the same, right? 18% with ITC or 5% forward charge or RCM without ITC. Whether there'll be two-phase invoicing in September for items where rate have changed, supply from 1st to 21st and 22nd to 30. There is no phases. The rate will change. On 22nd, you will start billing at the lower rate. Mr. Singh says, what will be the GST rate for job work for cotton industries? Again, specifically, you need to see the job work rate changes, right? It is there in our PPT. If it is specifically mentioned, right, job work for cotton industries, then it will be the rate which is specified. All other job work, if it is not mentioned, it will be 18%. But what we understand, for all these cotton industries and textiles, they have reduced the rate to 5%. So please look at more in detail on this job work. Ex parte order, whether time barred for appeal, will be before tribunal, but no order received in physical. Need to get it certified from order authority. Yeah. So you can always apply for an ex parte order also before the tribunal. If you have no online order, get a physical copy, but in the tribunal, you need to apply for the online mode. Now, I had taken a session with the CBIC very recently on the filing on the tribunals, right? VILGST has also circulated that link to all. In the tribunal, whenever you are filing an appeal, there are two specific tabs. One where order is physical, where it is online. So very good question. You need to file wherever you have a physical order, you need to file in the correct tab. Mr. Ashwin says, how a common purchaser will know that reduced price benefit is available for 22nd September? Ignorance of law is not a defense, Mr. Ashwin. That is what I can say. Mr. Parmod Kumar says, sir, can you explain about automobile part purchased at 28%, now 18%? Can you charge 28% until 28% stock finished? No way. Whenever the rate are reduced, you cannot charge more. In fact, a very good perspective you have said, but no way. Mr. Shirish Shukla says, whether input tax credit available for hiring of buses? Yes, of course, used for employee transportation. In my view, yes, fully available. What will be the rate of employee bus by vehicle on lease? Rate for employee by vehicle on lease. You need to be more clear, Mr. Bharat. Mr. Dinesh Singhania says, any rate in GST on purchase of flats? No. What is the impact on hospital sector? As I said, big time impact. Many equipments rate have gone down. Medicines have gone down. Many medicines are exempt. So big time impact on hospital sector. Can I claim refund of accumulated ITC in case of closed business if GST final return has not been submitted. You're talking about this High Court ruling in the case of SICPA, right? So you can take the benefit of that as of now, but I'm sure department would go to the for an SLP before the Supreme Court. So till that time, we need to, see how the jurisprudence evolves. Mr. Patil says, please explain on what basis we have to negotiate rate for civil vendors and canteen. Very simple, Mr. Patil. Take these to your vendors. You need to see what is their costing. You need to call them and you need to renegotiate, right? You need to see what are the products which you are supplying, what are the, so if they are supplying, say, paneer, you need to see what is the impact on that product of GST and what is the costing. Generally, food cost is not more than 40%. So at least 40% of 5%, they should pass on 2%. Mr. Mane says if sale return is received after 22nd at the time invoice, can we avail ITC? So for sale return, you need to pass a credit note. He will not give you an invoice. Now, if you are passing a credit note, you have to take the rate of your original invoice. But if sale return is happening as a sale by the customer, then it will be at the revised rate. Actually, we do not encourage this sale return in the form of a sale by the customer. Okay, last question, Mr. Mangesh. After 22nd, if stock is with dealer with higher MRP, then dealer is earning more. Can the company give him more discount by commercial credit note and ask him to give more discount to the end consumer? But it is difficult for a company to ensure he has reduced his prices. So number one, no, I don't think a company can give a credit note in this fashion, right? Whatever is supplied, it is supplied. From 22nd of September, there you need to start at the new rate, right? So at the outset, I think what you are saying, I will give a credit note, that possibly may not be possible for your old stock. But Mr. Manjesh, if you have certain other, provision of law where you can do it, you may let us know. We can dwell upon this further. Okay, last one more is there, Dharma Lingam. How to bill if MRP is not revised by the supplier for reduced rate of GST for a product? How to bill if MRP is not reduced? See, you have to ask your supplier to revise your invoice. That is very clear. If you are a trader, supplier gives you higher rate, you give lower rate, again tomorrow there might be a issue. There may be a classification issue. So my thought is that I have dwelt with this in my last video. If you see on our YouTube channel, please, if you are a trader, ask your supplier to bill at the right rate, right? Rather than the old rate. So yeah, thank you very much for this session. Thank you very much, Samir, for partnering with us again. Thank you very much. I think Deepa is also there now. So over to you, Deepa.
Thank you, Vivek. Thank you for this wonderful deliberation. Thank you, Samir sir from VILGST for coordinating this session with us. Thank you to all the participants for attending the webinar. We conduct such webinars every month and we hope to see you in the upcoming webinars as well. We will shortly share the PPT and the video link to all the participants. Thank you all once again.
Thank you. Thank you.